Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. Happy Thursday. These are the stories that set your agenda. Asian stocks tracking Wall Street's rebound as dip buyers swoop in to take advantage of tech sector weakness. Traders looking ahead to today's Bank of England rate decision. Uncertainty reigns as the US Supreme Court hints it is ready to put significant limits on President Trump's sweeping global tariff agenda. Plus, another flood of earnings in Europe this morning with heavyweights including AstraZeneca, Maersk, Rheinmetall in the defence space and Commerzbank all due to report. Speaking of that German lender, Commerzbank earnings crossing the terminal right now. Third quarter revenue coming in slightly softer than the estimates. It's a very modest miss in the third quarter on the revenue line for Commerzbank, 2.94 billion euros. The estimates had been for 2.98 billion euros. Third quarter operating profit also just within a hair of a miss in terms of operating profit for the third quarter, marginally softer than the estimates, 1.05 billion euros. The estimates have been for 1.06 billion. Commerzbank sees full year net interest income of about 8.2 billion euros. We know that is where the scrutiny will be from analysts in an environment, of course, of lower interest rates in the Eurozone. We'll be also watching for any uptick in loan loss provisions. This stock is up around 100% year to date. They still see full year net income of about 2.5 billion euros. Commerzbank, that is one of the key lines dropping as well. The estimates had been for 2.47 billion. So net income slightly above the estimates in terms of the full year view from Commerzbank. But on operating profit and revenue, very, very modest miss. We will be speaking to the CEO of Commerzbank, Bettina Orlopp, at 6:40 a.m. UK time. Do not miss that interview. We will also be asking, of course, about that UniCredit overture with that more than 25% stake from the Italian bank built up in Commerzbank. So stay tuned for that interview later in the show. Let's get to the broader markets then. We did see the dip buying and retail investors and institutional investors come back into the markets yesterday after that sell-off that we saw on Tuesday, of course, with semiconductors and chip makers facing the brunt of the selling. Yesterday, we saw upside for the Nasdaq 100 of about 0.7% by the end of the close. The S&P 500 closed up by about 0.4%. Today, a little bit more caution across these markets, maybe looking for the next catalyst. European futures pointing lower by just 0.1%. Actually ended in positive territory yesterday for European stocks. FTSE 100 futures, as we look ahead to the BOE rate decision at 12 UK time, a little softer, just by 5 points. S&P E-minis down by 0.1%, and Nasdaq 100 futures pointing low by 0.2%. Let's flip the board and have a look cross-asset then in terms of the Treasury markets and the focus on the pound, of course, in the lead-up to that BOE decision. The 10-year is currently in the US yielding 4.14. Yields moving just 1 basis point. A bit of a move into Treasuries. 1.30 on the pound right now, stronger versus the dollar, up 0.1%, dollar weakness. And gold is gaining 0.2%. Oil also slightly higher despite a build-up of inventories in the US, up 0.4% on Brent at 63.76 on Brent. Let's cross over and check in on the Asian markets right now. Winnie Su standing by in Hong Kong. Winnie, what are you seeing?
Yeah, quite a positive session in Asia today, pretty much rebounding from yesterday's losses after that big sell-off in technology shares. And you can see on the board that the MSCI Asia is up more than 1%, pretty much reversing all losses from yesterday. And we have heard from traders in South Korea and Japan this morning that they are seeing more dip buying orders. And on top of that, you've got that skeptical Supreme Court against Trump's tariffs. So that's supporting overall market sentiment, although the longer-term trading implication will depend on the final rulings. And you flip the board and take a look at what's going on in the Chinese market, because Hong Kong shares today are actually leading gains in the region. So on top of all these tailwinds that we discussed on the macro side of things, there was also local media saying that the Chinese government is asking the new state-funded data centers to use local chips. So that's supporting chip makers in China today. And look at here, the MSCI China is actually up more than 1.5%. And that's also partly because the MSCI reshuffling showed that this time around, the Chinese companies were seeing the first time in more than 2 years that they have a net increase in Chinese corporates. So that's also supporting the overall sentiment for Chinese equities from global investors. Now, bucking the trend, unfortunately, we are seeing some downside when it comes to the China's robot taxi rivals Pony AI and We Rewrite down about 13% each on their IPO days as they battle against each other for investors' appetite there. Back to you, Tom.
Winnie Su in Hong Kong, thank you very much indeed. Let's turn to the UK now, because the Bank of England will likely keep interest rates on hold today at 4%, ending a run of quarterly reductions. This as Governor Andrew Bailey takes a cautious approach ahead of the government's crucial autumn budget, with inflation still elevated. Bloomberg's Lizzie Burden joins us around the desk right now for the setup for this decision. It is still, though, a live decision for the BOE, Lizzie.
Very much so, and we've been speaking to analysts this week, haven't we, who actually see a cut. Barclays, for example, Goldman and Nomura too. And even if they do hold, Tom, it could be a really tight vote split. 6-3 is the expectation, but some are saying it could hinge on the governor this. Why? Because we're inching towards neutral. Yes, we don't know where neutral is, but most economists we speak to say it's about 3%, and the closer they get to it, the more slowly and carefully they're going to want to move. There's also the elephant in the room, which is the budget, of course, on November the 26th. And, you know, we heard from the Chancellor Rachel Reeves earlier this week promising it's going to be disinflationary, but I doubt that the Monetary Policy Committee is going to want to vote as if it's disinflationary without having seen the policies themselves. And we should say that the forecasts today, the updated forecasts, are somewhat moot because of that budget, even if the expectation is they're going to downgrade the inflation outlook compared to August for next year and this year, but keep the growth and unemployment forecasts the same. I'm really interested to hear what the governor has to say about the budget, because you'll remember Rachel Reeves said that the Bank of England keeping rates at 4% is holding back business borrowing. So let's see if Andrew Bailey's got a shot to pop the other way. Yeah,
a veiled, or maybe less veiled criticism, interestingly, from the Chancellor in that speech, as you say. So Andrew Bailey's comments will be in focus at the press conference, 12:30, but also in our interview with him as well. What are you expecting to be the focus when it comes to the press conference? Well, the question is, if they hold today, how long is that pause going to last? Are we actually going to get a cut in December? And to kind of answer that question, I'm really going to be listening to how the governor characterises that 3.8% inflation read that we had the last time. Because, yes, that's lower than the Bank of England's forecast and the consensus forecast, but it's still nearly twice the BOE's target. How do they talk about the labour market? Because last time, there were lots of hawkish hints. They were emphasising the worries about food inflation, inflation expectations as well. If they're much more dovish in the communications, and if they cut rates today, you could see this continued outperformance of gilts that we saw through October, and $1.30 is the key level on cable that you need to watch. $1.30 as we look at cable right now at $1.30.67, just up a tenth of a percent so far in the session. Lizzie Burden with a fantastic setup for a big day for the BOE. This meeting is live. Of course, we'll bring you all of our special coverage, of course, of that rate decision from Bank of England, beginning at 12:15 p.m. with Governor Bailey's press conference later in the hour. Do not miss our interview, of course, with Andrew Bailey. That will be at 4 p.m. UK time. Staying with the UK, the Financial Times is reporting the Chancellor is set to spare Britain's banks from a punitive budget tax raid after making it clear to colleagues she wants the sector to remain competitive and able to support the country's growth. A source told the paper that raising taxes on the sector is a long way down the list of budget possibilities. To the US now, the US Supreme Court appears sceptical of President Trump's sweeping global tariffs, as justices suggested he had overstepped his authority with his signature economic policy, of course. In a hearing yesterday, the court hinted it was ready to put significant limits on Trump's far-reaching agenda. Bloomberg's Kriti Gupta is here. So, Kriti, we still wait the judgment, of course. This is what we picked up. This is what we gleaned from the comments and the questions from those justices. Where do things stand ahead of that decision from the Supreme Court?
Well, we should remind our global audience that going into this, we did start to see the Supreme Court, or we have seen the Supreme Court is split 6-3, conservative to liberal. So there was a question here of, has Donald Trump already kind of stacked the court in his favor? Will this already, going into this hearing, will the odds be in favor of some of his policies? And that's really where we've seen the plot twist kind of shake up here, because some of the language that's being used in terms of the 12 states and the American businesses that have basically sued the government for this tariff impact, they're starting to liken tariffs to taxes. And that's something that, although from an economic perspective, we say quite often in terms of the impact on commerce and the impact on businesses, the impact on consumers, that isn't necessarily something that people use in the mainstream media, and of course in mainstream commerce, and specifically not at the Supreme Court. And to hear that from conservative judges was really the tipping point to say, well, actually, maybe these policies and the Supreme Court hearing doesn't have, or Donald Trump doesn't have as much support from them as maybe we thought going into it.
And this is all happening in a time, of course, of great focus in the US on this continuing shutdown. So you have the Supreme Court decision around tariffs, which should be consequential, of course, for the domestic US economy, but internationally as well in terms of the trade agenda of President Trump. But also the shutdown continues. We're day 37 now, and we're seeing the impact, and there's impacts across the board, but really a prominent impact this morning is around flights in the US.
I mean, it's getting bigger and bigger, and this really does connect to the story of the Supreme Court as well, because one of the arguments that Donald Trump and the White House is using here is that the tariff revenue is meant to shield a deficit that he's calling that's coming down to an economic and national catastrophe. That's really where the shutdown is coming in terms of just trying to save costs and cut that spending. To your point about the impact, we are starting to see the flights, as you see on the screen at the moment. 10% of capacity in 40 major markets. There was video from the Houston International Airport over the weekend where there were just lines and lines. People who had even arrived 3 hours ahead of their flight couldn't make it to their flight. And again, those are the people who actually take that 3-hour rule very, very seriously for international flights. That is a very big deal. That being said, you did have the National Transportation Secretary say this is a largely domestic story. International flights will not be affected. But we should mention this comes in the backdrop of air traffic controllers that have been striking, pay issues that have been showing up for federal workers as well as the military as well, not to mention some of the food stamps and the food aid programs that the government can no longer provide for, and something that even in the emergency funding, kind of that stash of cash that the government has in the case of a prolonged government shutdown, even that is no longer being tapped for some of these really dire cases. And
in terms of the flights, of course, leading up to the Thanksgiving holiday, a crucial time for travel across the US. Kriti Gupta, thank you very much indeed. Of course, anchor of opening trade on the Supreme Court's machinations around the tariffs and the impact of the ongoing government shutdown, now the longest in history at 37 days. It made that mark, of course, in that record yesterday. Here's what else to think about today then. 6:30 a.m. UK time. This is a really big one in terms of the defence space. Rheinmetall earnings will break. We'll get those for you, of course, as they drop. We're going to be speaking to the CEO as well. That's at 7:05 a.m. UK time. We will have an interview with the Rheinmetall CEO, Armin Papaga. Is he starting to see that stimulus coming through from the German government to support the defence sector of Germany? And at 7 a.m. UK time, we'll also break AstraZeneca earnings as well in the pharmaceutical space. 7:45, meanwhile, we will have an interview with the CEO, Pascal Soriot. So stay tuned for that conversation. And later in the day, it is the Tesla AGM, the vote, of course, to decide on Musk's potential $1 trillion pay package. Very consequential for anyone exposed, of course, to Tesla. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to Go on the terminal, and tariffs and Trump are centre stage. Coming up, Zurich reporting a jump in gross written premiums in its property and casualty unit. The insurance giant's CFO joins me in the next few minutes. Plus, we will speak to the CEO and founder of AI language platform DeepL, the German rival to Google Translate. We'll discuss the company's new tools, agentic AI, and whether an IPO is on the horizon. That's coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe, to the earnings story right now with a focus on insurance. Zurich Insurance says that its gross written premiums in its property and casualty unit rose 8% in the 9 months to September, helped by growth in its retail and commercial insurance businesses. We're joined now by the CFO of the business, Claudia Cordioli, CFO of Zurich Insurance. Claudia, good morning. Thanks for joining us on the back of these earnings then. Talk us through how this sets you up for the quarters ahead.
Good morning, Tom, and thanks for having me here. Indeed, I'm very pleased about the start of the new year and the new 3-year plan cycle. So the last 9 months have been an extremely strong testimony to the diversified balance sheet and the business model that we've got. As you mentioned, our premiums are up 8% for P&C in the first 9 months of the year to a record 39 billion. That's the first time in our history. Our life and health premiums are also up 11%. Farmers, which is the business that we support, retail business in the US, is also up in premiums 5%. And their capital strength that they've been gaining through a transitional phase and a transformational phase is well positioning them for further growth. Last but not least, our capital position is very strong at 257% SST ratio. So all indicators are pointing in the right direction. Very pleased about the way we started in the new year cycle.
And to be clear, Claudia, in the current quarter, are you seeing that level of growth in premiums continue?
Absolutely. We are seeing actually the growth accelerating in some areas like commercial insurance and particularly in the retail business. So you need to think, Tom, in the last 9 months, we've been seeing 16% raise in our retail premiums, with EMEA playing a very, very strong role. So extremely pleased about the growth, and at the same time, the fact that we've been able to improve the profitability, which is not obvious. So growing premiums and at the same time being able to improve our combined ratio and our loss ratio, that has been a great work done by the underwriting teams. Very pleased about that.
And how much closer does it take you then to these the ambitious targets that the team, Mario Greco and you, have set for yourselves in terms of earnings per share growth of more than 9%, return on equity above 23%, seen by the street as being pretty ambitious? What's your level of confidence you hit those targets?
I'm absolutely confident that we will deliver. Zurich is a company that's extremely focused on execution, Tom, and we are laying all the actions in place. We have everything that we need in line to be able to deliver on our 3-year targets. So just to remind everyone, we've been committing to an EPS compound growth of above 9% over the 3-year period, an ROE which is industry leading of above 23%, cash remittances of 19 billion over the accumulated 3-year period, and we are executing very well against all of them. So I'm absolutely confident that we will be able to deliver.
I want to ask you about some comments that Mario Greco, the CEO of the firm, has made in relation to private capital firms' growing push into life insurance. What are the key risks there that you see?
Well, you've seen renewed interest or strong interest, as you say, from those players into the life business, and particularly in the EMEA space. Obviously, this is a business that's long-term, so you need to make sure that who invests in this business has got alignment of interest with the policyholders, which is front and center in the minds of the regulator and players like Zurich alike. So that's, I would say, the first and foremost point that needs to be given. The alignment between whoever invests in those closed life books and the policyholders need to be there. And then there are a number of other factors, like the ability to operate very large balance sheet, like the one that we've got in Germany, for instance, and we have in Italy and a number of other countries. So those are also considerations that are extremely important in the eyes of the regulators.
On that point, I guess, what do you make of the recent failures that we've seen amongst the insurance consolidators, whether that's in Italy or in Switzerland? We've got the failures of companies like Eurovita in Italy, FWU in Luxembourg, UPlus in Switzerland. What does that say to you, Claudia?
Yeah, well, I do think, Tom, that this is exactly a confirmation of what we were saying just before. There needs to be the willingness to invest over a long period of time. The Eurovita example is exactly going in that direction. Whoever wants to play in the life space needs to be in for the long term, needs to be there to support the customers over the long term. And that might mean that it needs additional capital. It might mean that it needs competences and the ability to work with the customers and operate very large systems and complexity. So whoever wants to invest there needs to be in for the long term.
You tried to offload a $20 billion book to Viridium Group last year. That didn't quite work out. What are your plans for that now? Do you still plan to offload that? It
is still in focus. So just to remind everyone, this has been This has been an initiative that Zurich has started a few years ago. As you said, it didn't work out. There were some regulatory topics that came into the transaction. Now, Viridium, as you know, has changed hands, so the ownership of Viridium is sitting somewhere else in a consortium, and there are other players who are also very interested, potentially, in the Zurich book. From our side, the situation is different, obviously, because the interest rate situation used to be a very different one in the COVID time when we initiated the sale process. That said, Tom, we are still strategically interested in a sale of the book, and we are evaluating our options and talking to a number of players.
Claudia, really appreciate your time on the back of those earnings. Zurich Insurance CFO Claudia Cordioli. Claudia, thank you. Coming up, we're going to hear from the CEO of robo-taxi firm Pony AI as that company's shares plunge on debut in Hong Kong. That is next. This is Bloomberg. Pony AI and WeRide fell on their trading debuts in Hong Kong as the pair of Chinese robo-taxi firms battled for investors during their public offerings. Pony AI CEO James Peng spoke to Bloomberg ahead of that listing.
We actually have relatively big footprint in our global markets. I think we're now in 7 markets: South Korea, Singapore, Luxembourg in Europe, 3 countries in the Middle East. Regulation is a key part of our business, and we want to be a strong supporter and a strong negotiator for government actually to pass the regulations. So certainly we're not in a waiting mode for the regulation. That's one point I want to make. But among all the markets at this point, seems to be the Middle East, especially UAE, seems to be probably in terms of regulation to be the fastest to approve fully driverless commercial licenses. But I think other countries definitely will follow suit. And we already have a footprint in those markets. We have good partners in those markets. And once the regulation is ready, we'll double down and push our more fleets into those markets.
You've actually been operating in the U.S. much longer than in the UAE. What are some of the biggest roadblocks you are facing in terms of commercialization in the U.S.?
I think that it's some geopolitical concerns. Also, there's data transfer, data storage, and some other concerns. So we deprioritized our commercialization in the U.S., but rather focusing on other markets.
So are you giving up plans to commercialize there now?
At least for now. Or we should say, at least we paused.
Pony AI CEO James Peng with our China correspondent Min Min Lo. Sticking with tech, Bloomberg has learned that SoftBank explored a potential takeover of US chipmaker Marvell, a move that would have marked the chip sector's biggest ever deal. Sources say the talks have since stalled, but Marvell shares surged to 13% on the news. The $80 billion target was seen as a strategic fit with ARM Holdings, which SoftBank controls. Meanwhile, ARM shares gained in extended trading after the chip designer issued a bullish revenue forecast. The company expects fiscal third quarter sales to reach $1.23 billion, surpassing the average analyst estimates. Plus, we will speak to the CEO and founder of DeepL, the German AI language platform taking on Google Translate, to discuss the firm's new agentic tools and whether an IPO is on the horizon. Jarek Kutylowski joins us next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asian stocks track Wall Street's rebound as dip buyers swoop in to take advantage of tech sector weakness. Traders looking ahead to today's Bank of England rate decision. Uncertainty reigns as the US Supreme Court hints it is ready to put significant limits on President Trump's sweeping global tariff agenda. And Commerzbank raises its outlook for full-year lending income, even after third-quarter results were a miss. We're going to be speaking to the CEO of that lender, Bettina Orlopp, just ahead. Let's get the latest in terms of the earnings story as well, before we turn to a focus on technology. So Continental earnings coming through, also, of course, listed over in Germany on the extra DAX. The DAX, of course, are coming through in terms of the latest earnings print. Just pulling them up for you. Third quarter adjusted earnings for Continental down 15% year on year, 565 million euros. Looking at the margin as well in the third quarter, the adjusted margin 11.4% versus 13.3% year on year. So it's a softer margin story for Continental year on year. And in terms of adjusted earnings, also contracting year on year. Sales falling close to 1%, 0.9%. Sales coming in at just shy of 5 billion euros. We're bringing up Rheinmetall as well in the defence space. This stock, of course, has had a significant run-up in the last couple of years, so a key player when it comes to defence across Europe and, of course, in Germany. Getting the latest details for you in terms of third-quarter earnings from Rheinmetall. Operating margins of 835 million euros. That is up 18% year on year. That's over a 9-month period. The operating margin at 11.1% over a 9-month period. That's the operating margin. The operating profit at 835 million. So the operating profit is up almost 20% year on year. The sales picture across the first 9 months of the year, 7.5 billion euros. Rheinmetall confirming its 2025 outlook. Again, across the 9-month period then, operating profit coming in at 835 million euros versus 705 million euros year on year. So profits are improving, sales are improving. They still see full year sales at Rheinmetall increasing between 25 to 30%. So up 25% at the low end of the range, up 30% at the top end of the range. We're going to be speaking to the CEO of Rheinmetall just after 7 a.m. UK time, Armin Papaga. So stay tuned for that conversation. Let's get to the broader market story then. You did see some dip buying in the US session yesterday. European stocks even ended up slightly higher as well, up 0.2%. Today, though, a little bit more caution after the dip buying that we saw on Wall Street yesterday. European futures called lower just by 0.1%. FTSE 100 futures as we await the BOE decision at 12 o'clock UK time, a little softer by 0.1%. S&P E-minis currently down by 0.2. S&P 500 actually closed higher by 0.4% yesterday. Nasdaq 100 futures after a decent day yesterday, pointing lower by 69 points. Let's flip the board and have a look cross asset. There's a bit of a sell-off when it comes to the US dollar. That's lifting the euro and the pound, and a bit of money flowing into treasuries. 4.15 right now on the benchmark US 10-year, 1.30 on the pound as we count down to the Bank of England's decision, up 0.1%. Gold gaining 0.1%, and you're seeing Brent also slightly higher by 0.3 at $63 a barrel. Let's get to the tech story then, and AI. The German AI language firm DeepL has unveiled a series of new translation and office efficiency tools. DeepL Agents, which the company describes as an AI co-worker, offers to automate tasks and streamline workflows faster and more accurately. Last year, the company, which is seen as a European rival to Google Translate, raised $300 million at a valuation of $2 billion. Very pleased to say we are now joined by the CEO of that company, Jarek Kutylowski, the CEO and founder of DeepL. Jarek, I know it's been a very busy time for you, so we appreciate you taking the time to speak to us. And, of course, you founded this business back in 2017, well before OpenAI and ChatGPT came onto the scene. You're backed by the likes of Index Ventures, Benchmark and IVP, and you've been producing these products, Jarek. How much demand, then, is there for your agentic AI product, and where do you see that fitting into the enterprise space?
Yeah, so I mean, we've seen a lot of demand coming up even after the launch yesterday. Our customers have been asking for quite some time to take the kinds of AI research that we've been doing and applying it to the language space, to take this just further and take our approach to build reliable AI tools that are based off the latest technology, but also made in a way that they actually work in the enterprise, and bring that to new fields. And this is really what the AI agent is doing, and we see this as the best agent for the business on the market out there.
What does it tell us about your ambitions and DeepL's ambitions? You've moved from a translation product that rivaled and in some cases, some would say, outstripped what Google was able to do, and you were selling into enterprise on the back of that, to agentic AI and now this customization hub as well. What does it tell us about your ambitions for the business in the next 2 to 3 years?
I mean, we want to build a global AI company that is coming out of Europe, and that also means that we will have to expand our product range. I mean, language is an incredibly important market for us and will remain an incredibly important market for us, but there's just more that we can do, and I think we're all also really excited about what this technology can purely offer.
Jarek, as you look across sectors, are there certain sectors that are seeing a very strong demand for these kind of products versus other sectors? Is it uniform across the board? How are you seeing it kind of breaking down sector by sector, maybe region by region as well?
I mean, like the products that we're offering there are pretty universal across different sectors, so we're seeing a lot of demand. It's obviously tech companies who usually adopt these AI tools the fastest, but we're also seeing manufacturing, we're also seeing professional services, or basically all of those sectors coming up. And geographically, we are obviously very, very strong in Europe, but we're also seeing strong demand in Asia. And the US really is a strategic market for ourselves. We're trying to make sure that we're also present in a market that is not local to us. I think every company should think of being globally present. Therefore, we're totally diversifying over the whole world.
Does adoption in Europe lag adoption in the US?
I wouldn't say so, especially with our types of products. I think coming from the language space, Europe was historically a very, very good market for us, and that comes just out of the experience that European companies make when they're entering all of the diverse language markets in Europe and also outside. So I would say that for us, it's both markets being really on par.
Jarek, what is your biggest roadblock to faster growth at this point? Is it talent? Is it compute? Is it enterprise adoption? What is the biggest kind of headwind at this point?
I think it's going to be talent for everyone, honestly. Like, even though DeepL has a strong brand, is obviously incredibly well known in Europe, and we can hire well, there's just a limited pool of talent out there, and there's quite a few companies who want to hire the best people. So this is something that we're obviously focusing a lot on.
I talked about the fact that you successfully raised $300 million at a $2 billion valuation last year. I suspect the valuation is up from that now, Jarek. We've been reporting, the team has reported at Bloomberg that you've considered an IPO. Can you give us some more details? Where are those conversations, Jarek? Is 2026 a year when you list?
Tom, we are building this business really for the long term, and I think we will be thinking about potentially going public when the time is right for that. There's also a lot of advantages staying a private company, especially in this like very tight and very incredibly fast-paced race in AI. So I think we're going to have to wait for that moment coming up.
Okay, it sounds like you're still weighing up your options on that front, Jarek. I want to push you on the potential. If you were to list, Jarek, this is a key question for those in the European tech ecosystem. Is it inevitable that it would be the US, that it would be New York, if you came down on that side of this discussion?
I think it's a little bit too early to make this decision, but I think just the sheer volume of transactions happening in tech on US-based stock exchanges prime those a little bit for tech IPOs. We don't have this consolidated mass of tech-aware markets in Europe yet, at least. So I think most of the tech companies out there will be thinking about the US for this.
And Jarek, if there was one thing that Europe could do to support companies like yours in Europe with your own model, with, of course, your own stack of GPUs and AI accelerators, your own depth of research, what would it be?
I think we need more boldness and more courage in Europe to build more AI. I think as a as Europe, we're selling ourselves still a little bit short. So I would really encourage all of the European governments to put on a very strong AI-related agenda and make sure that we can compete on the investments and on the conviction towards our economies being driven by AI in the future much stronger.
Okay, DeepL CEO and founder Jarek Kutylowski, thank you very much indeed, Jarek, for the update. Of course, we appreciate your time. Coming up, we're going to be discussing third quarter earnings with the CEO of Commerzbank, Bettina Orlopp. That is coming up next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Commerzbank has raised its outlook for full-year lending income, even after third-quarter results fell slightly short of estimates, hit by a higher tax rate. CEO Bettina Orlopp joins me now from Frankfurt. Bettina, thank you, as ever, for your time. Let's start on the top-line earnings then, and the raise in terms of the net income and net interest income forecast. What has led to that, and how confident are you that you're going to be meeting that forecast?
Well, we're very confident, actually, because if you look on our results, it has been a record operating result for the first 9 months and very much driven by growth and then leading to a higher profitability. And growth stems from two factors. One is our lending growth, 13% in corporates, but also the net commission income growth. And that is coupled and translates very nicely in a very good cost-income ratio, which has come down from 59% to 56%, and a net ROTE of 10%. And specifically, the NII was good, and that was driven on the one side by the lending growth, but on the other side also very good management of the deposits, of the deposit beta, and therefore we raised also our outlook from 8 billion to 8.2 billion for this year, and we also raised already our outlook for next year, where we thought it would be around 8 billion, and now we have increased that already today to 8.4 billion for next year.
And specifically, Bettina, on lending growth, does that momentum continue? You're confident that that momentum continues into 2026 then?
Definitely, because I mean, when you see the stimulus package of the government and also the tax reliefs, all this is just coming in. The budget has been just agreed a couple of weeks ago. So we actually do not see that yet really in activity and economic data. So I'm very confident. Also, when you look on our GDP outlook, it's 1.2% for next year. And we will clearly benefit from that. We already see activity today very much focused on I would say, infrastructure and defense. And we still wait, actually, that the corporates and specifically the Mittelstand show more activity. And that will hopefully also follow next year if the government is doing what they have promised, implementing some significant reforms also when it comes to bureaucracy, energy costs, and things like that.
Yes, indeed. Okay, so it's clear that your view is that Commerzbank does benefit from that fiscal stimulus and that support around infrastructure and defence in 2026, and that will be a significant story for you then.
Yeah, absolutely.
Yeah. What is your current take of the German economy, Bettina? And are you disappointed that the German government, this relatively new government, has, at least in some readings, failed to reform quicker than maybe some had expected?
Well, I mean, it's a mixed picture which you currently see. When you look on the production data, it's indeed still, and it has recovered when you take the latest data from yesterday compared to August, but it's still not in the area and the level what we really want to see. So activity is missing there. On the other side, you see IFO data, which has reached the highest level since 2022, which is the business sentiment is clearly improving. Consumer confidence is also improving when it comes to mortgage activity, when it comes to retail business and stuff like that. So it's really mixed, but it's very clear, and we are all pushing for that. We need to have reforms. there's a lot of activity. There's been also yesterday a proposal on reducing bureaucracy, but we need to see much more of that to really improve situation midterm.
Okay, and back to the bank and the lines across the announcements today. You're going to be starting up a 600 million euro, up to 600 million euro buyback. What is the time frame for that? And is there more you can do to return cash to shareholders?
Well, first of all, we are in the middle still of the 1 billion program, which we have announced a couple of months ago, but we have now started the approval process for up to 600 million for a second one. I mean, we laid out clear promise and a clear capital return plan for this year, but also for the coming years. And if you take the numbers, we always said that we would give back the net profit minus the AT1 payments. That brings you, if you take our guidance, to something up to 2.6 billion euros for this year. We now have started 1 billion with the share buyback program. We have applied for up 600 to give us some flexibility for year end when we see how it's coming in, because we clearly also want to pay a very attractive dividend.
Yes, and part of this is part of the efforts to fend off Mr. Orlopp over at UniCredit. Of course, has built up that 29% stake in Commerzbank. Bettina, have you had any conversations with Mr. Orlopp in the current quarter?
Well, we have. We have frequent interactions because it is an important investor, and we do have interaction with all our important investors on a quarterly basis. That means we will also have an investor meeting with UniCredit this quarter. That's clear. It's very professional, but it's also not more than an investor meeting.
Are there any concessions that UniCredit, that Mr. Orlopp could make, whether it comes to the board, whether it comes to lending, whether it comes to branch commitments in Germany?
Well, we always said that we would be willing also to sit down and to discuss something, but we need to have a formal or informal proposal which lays out a little bit the ideas of a combination. And as long as we do not have that, we can also not judge on it and evaluate.
And is there anything else that you and the team are doing, Bettina, at Commerzbank to kind of fend off this takeover attempt? Would you consider, for example, onboarding another asset?
Well, we always said that we would not do stupid things. That's very important. And clearly, we said that we would look into growth options. We do that organic. We look on the organic side. What can we do to invest more? How to accelerate things, like also via AI. And we definitely also think about tomorrow and not today. And we also do our regular review on potential M&A options. And if there's something which is value accretive and which benefits our business model, we would definitely do it. But it needs to meet certain requirements because we are here to create value for our shareholders and nothing else. And I think we have done that pretty successful over the last 12 months, and we intend to do that also in the coming quarters.
Well, the stock is up more than 100% year to date. So, yes, a green tick in the box on that front, Bettina. What about the support you're getting from Berlin?
Berlin has been very clear on what their stance is. It's a minority shareholder. One should not forget that. They also have an important stake, and they made it very clear that they do not like the approach, and they are very supportive. And I think it's also very important, given the stimulus package. We are the bank for the Mittelstand. 30% of German export runs via our books. People should not forget that. So having a stable, profitable, growing bank with a very positive momentum is also good for Germany.
Bettina, briefly on private credit, a number of banking executives have been weighing in on the risks around this. Jamie Dimon famously with the cockroaches line. Are you concerned? Where do you stand on the risks around private credit? Are you starting to see some stresses and strains?
Well, first of all, our exposure to private debt is not there. So we are very first of all, for our own positioning, we are very comfortable, but clearly we follow on the developments, and it just shows how important resilience is, how diligent you need to do your homework, and that you need to have a very good risk management in place, and that having enough capital, having enough liquidity is an important one. So we monitor it closely, but luckily our exposure is near to non-existent.
Bettina Orlopp, CEO of Commerzbank, thank you very much indeed for your time this morning as the bank raises its outlook for lending income, just missing slightly those profit estimates for the most recent quarter. Bettina, thank you. There's a lot more coming up. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So it's a bit of a muddy picture when you look at European and US futures today, but you did see the dip buyers coming back in. We heard that prediction from our guest on Barclays, Emmanuel Cour, early yesterday morning, and then you saw that come through in the US session, and you saw the chip makers as well, the semiconductor index up around 3% after the previous day seeing a market valuation drop of around $500 billion US. So the dip buyers were back. We'll see how that story plays out today, of course. You saw that coming through in terms of support for some of the biggest chip names. Let's flip the board and have a look at the bond issuance story. We have a Bloomberg story on the terminal today talking about the fact that we've got to almost $6 trillion. That's a record. Stripping out what we saw in 2024, beating what we saw in 2024, coming from the sovereigns, coming from the financial sector, coming from mega cap tech as well. This is the European story in terms of bond issuance. Also a record through to this part of the year, through to November the 6th, $2.3 trillion in terms of the debt issuance from sovereigns and from corporates as well, taking advantage of relatively low rates, of course, and as well funding that build out, particularly in the US, of tech. Talking of AI infrastructure and tech, we think about Tesla and the AGM later today. The chair of the board of Tesla saying that if Musk does not get his way on his potential $1 trillion pay package, he might walk away from that company. Here's how it breaks down in terms of the market cap milestones for Musk. As you look at tranche 1, tranche 2, all the way down to the 12th tranche and an $8.5 trillion market cap company, that is what he would have to achieve to get the full payout. That AGM later today. Before that, though, our special coverage of the BOE rate decision beginning at 12:15 p.m. with Governor Bailey's press conference later in the hour. Don't miss our interview, of course. Opening trade, though, is up next. This is Bloomberg.